Now, let's talk about the actual pension options and so forth. These are the questions that I get a lot of Boeing employees asking me is, what's best for me to do, my lump sum or my single life or survivorship? So first, let's talk about how it usually looks like when you get your estimated paperwork or when you're actually applying for it. So this is something how it would look like. They're going to give you your lump sum option, which you can see in this example is in the very top right here, 455,000, and then it shows single life annuity, 50% surviving spouse option, 75% surviving spouse option, 100% surviving spouse option, and life with 10 years certain option. And there is more, but these are the ones that usually gets listed when you're running your estimate. So let's first go to the lump sum. What does that mean? Lump sum means exactly what it means. You get the lump sum options. Now, are they tax consequences if you take the lump sum option? Well, if you do it as a distribution, it will be, but not if you roll it over. So if you roll it over from one pre-tax dollar to another pre-tax dollar, then no, there will not be, which means is you're rolling it over into an IRA. Now, should you take a lump sum? That's really going to be determined in your specific situation. So for example, what other sources of income do you have? How are you going to take that lump sum, in this case 455,000, and make sure it is giving you the income that you need during retirement? There are lots of pros and cons when it comes to a specific situation. So I want to make sure that while I'm going through this quick little presentation for you, that you understand your situation is unique to you, and it is important for us to talk before you make a commitment or you actually choose an option. One reason that people choose the lump sum pension option is because they want to do, for example, tax planning. So they want to make sure that they actually are choosing the right plan that's for them. So for example, let's say you have different sources of income that are coming in and you have a 401k plan that is going to kick in RMD, which means required minimum distribution, at age 72. And then you may have rental income and so forth. So if you did the pension option, that allows you to do better tax planning, meaning in terms of conversions. If you were looking to convert part of that pension into a Roth, now you would be able to do that, versus if you turned on just income for life, you will not be able to. So again, depending on your situation, the lump sum pension could make perfect sense for you. And in some cases, it does not. Again, remember, it's specific to your situation. So now let's take a look at, by the way, another reason sometimes people are taking lump sum options because they're concerned about the pension being underfunded. And what if they change the terms to the pension, or what if something happens? So we'll talk about that in a little bit later slides. Right now, let's just focus on lump sum. Means you are able to take it out, roll it over, and use it based on the rules on pre-tax dollars, meaning 401k, IRA. At some point at age 72, you must take required minimum distribution out. So if you roll this over to an IRA and you never touched it, at age 72, you're going to have to take that required minimum distribution. Now, let's talk about single life annuity. Single life annuity means one person. Now, pension, when you annuitize it, when you take monthly amount, that's what it means. That annuitization means that you are turning on the annuity. Now, by the way, in a lump sum option, I'm going to go back, you can take it out and take it to a private annuity and do an actual annuity payment as well. So again, which way you do it depends on the pros and cons. So for example, if you did a single life annuity through your company, let's just say in this example, you get $2,800. You get $2,800 whether you collect for 2 years, 3 years, or 30 years. But the moment you die, your spouse or your beneficiaries receive nothing. So sometimes people like annuity payments, but they want more the beneficiary choices. So if they took it to, let's say, a private company and annuitized, then there are annuity options available that, for example, what they do not, maybe they take the highest benefit to them, but what they do not use will go to their heirs. So that could be one, again, pro why people choose it. Where's the con? It is never going to be, in most cases, I shouldn't say never because I've seen it sometimes be actually pretty equivalent, but in most cases I've seen that the payment may not be as high as the payment as you would have received with your Boeing pension. But again, pros and cons, right? You look at both sides. But in this example, if you chose the single life annuity with Boeing, you get, in this example, $2,800. Doesn't matter how long you collect, your spouse will not receive anything. Now let's take a look at, what if I chose surviving 50%? It means exactly that. They get 50% of what you get the moment you die. So if you're receiving $2,700, so in this example, you can see you gave up $100 less. The surviving was $2,800. You gave up $100 for your spouse to receive 50% of what you will receive. So single will give you the highest payout, then 50% will reduce it a little bit, but your spouse will receive 50%. Why would someone use the 50% option? Maybe their spouse is, for example, much older than them. So they expect that they're going to live longer than their spouse, but they still want just in case. So they may use the 50% option because it gives them a little bit less, but it at least gives 50% to their loved one, to the, I shouldn't say older loved one, but to their spouse, to who they are married to, not the kids. Now, what if someone wants the best, the highest income they can get, but they want to give 75% at least to their heirs? So in this example, instead of getting that $2,800 or $2,700 with 50%, they'll get $2,500. So you can see proportionally it goes lower, but now their spouse gets $1,875 versus the previous slide, they would have got $1,350. They would have got $2,700. In this slide, they would get $2,500, but their spouse will get $1,875, which is 75%. Our recommendation is, when you're married, it is really important that you're looking at not just your benefits, but your spouse's benefits as well. So we always think it is very, very important to, at the very least, be at this 75%, not the 50%, because you just don't know what life throws at you, unless, as I said, your spouse is older than you. So I would say minimum you should be looking at 75%. Personally, I prefer for spouses that they're looking at 100%. So in this case, instead of taking $2,800 in that very first slide, you're taking $2,400, but your spouse gets $2,400 when you die as well. This is so important because I cannot tell you how many sad stories I have seen over and over again. And in some cases, Boeing employees that didn't know that they were filling out their pension the right way, and they ended up choosing the 100% annuity for themselves, the single pay, thinking their spouse was also going to get it, but it turned out they did not. Remember, when you look at that, I'm going to go back to that original slide that I had. This is how it looks like. This not applicable means they get nothing. So you can see the survivor gets this side, you get this side, but make sure that you're not choosing anything that they get nothing. This is really, really important. Now, I'm glad I came to this slide because there are a lot of times that I see spouses that go, well, you know what? Instead of choosing 100%, which I'm only going to get $2,400, why don't I choose lifetime with 10-year period certain? Because in their mind, they think the lifetime, they're taking a little bit of a hit, in this case, $2,851 versus $2,743, and they think when they die for 10-year, their actual survivor, their spouse, will continue getting that income for 10 years. So that sounds reasonable to them. Unfortunately, that's not how the period certain works. So I'm going to fast forward again to that slide. So let's go to, if you chose lifetime with 10 years certain. So let's say if you're 62 and you choose that $2,700, here's the period certain. The period certain begins the moment your income starts. So that means for the next 10 years, up until you're 72. So if you die between 62 to 72, during those periods of time, your spouse will receive the money, but it runs out right after the 10th year. That is what period certain means. Make sure you clearly understand it. Again, this is one example that I've seen too many times where the spouse passes away 15 years later and their surviving spouse thinks they're going to have 10 years of period certain coming in, but they don't realize that more than, if the spouse had collected for 15 years, they already went through that first 10 years and they were going to receive nothing after that, and they didn't realize it because they thought the trigger point was death. It is not. The trigger point is the moment you start. The actual employee starts the income. So keep in mind again, if you were 62 and you died at 66, your spouse receives from period 6 to year 10 the income, that $2,700 a month, but the moment that tenure is done, the spouse receives nothing. This is really important. You will, if you live, you continue, the employee, you continue, or the former employee, or the retired employee, I should call it, will receive that income forever. But again, the spouse, period certain, dies after, not the spouse dies, their income dies, I should say. The income goes away. That the moment their benefits goes away as soon as that the 10-year certain comes. Now, you can choose any year certain period, life, meaning you can choose lifetime income for you and a 20-year certain. So if you chose 20-year certain, instead of it being 10, it would follow for 20 years. Why would someone choose 10 versus 20? Well, remember, your income will drop. The more you will choose the benefit certain period to cover your spouse, just like the survivorship, that means you take less so they can get more. So again, there's no right or wrong answer. Everyone is different, but I do believe if you are approximately the same age and you do not have other resources to replace this, then it makes sense for you to have survivorship. Now, have I seen cases where there's no reason they can take single life? Yes, because there are cases where you can use advanced life insurance planning to compensate the loss of income, possibly in some people's cases for pennies on the dollar, but receive your single life. Again, it depends on your situation. That's why I highly recommend running the actual analysis to see what's best for you. That's one of the things that we do on a regular basis. We sit down with Boeing employees and run their pension to see what's the best way in their situation. Does it make sense for them to turn on which method that works in their situation, and running a Monte Carlo that gives them the highest result, the best for their family situation, because it's not just about protecting you. I know for you it's about protecting your family as well. Now, the other option you have is actually period certain, which I apologize. Give me 1 second right here. Just get rid of this life. It's just called any period certain. So you could do life with period certain, or you can actually do period certain. Some pensions will actually, depending on which program you fall under, will give you the period that you can take it. So example, you may decide, I'm just going to take out over the next 20 years period and forget the life. I will just do 20-year period and that's it. Again, depends on which pension plan you have. Some of them do not allow that. It depends on which one you were with. You know, there is the Hughes pension, right? And then there was one that froze in 2014. So it really depends on which one you're in. Now, let's go to the accelerated income option. Some of your Boeing pension will have this option. This allows you to collect a larger than normal portion of your pension benefit until age 62 and 2 months, and then a smaller benefit afterwards. Your single life annuity is reduced to pay for this option. So, is this the right decision? it depends on your circumstances. Some people want to receive a higher amount and then they want to collect less later. It depends. They may have different sources of income that comes due at that point to compensate for the reduction that we'll have later. So again, please don't jump into this because you think, I want to have more money during my go-go years, right? So that's like the first decade of retirement. And then they think they're going to go into slow and then no-go. Well, I have news for you. After seeing so many people in retirement, I have seen the go-go years be a lot more than you ever thought. So you don't want to interfere with cost of living adjustment and also lifestyle and have to reduce it because you took an accelerated option at the beginning and you got less later on. I think it's important to keep up with your lifestyle in all the decades of your life, not just the first decade. So let me share an interesting fact with you. Remember earlier where I said there are actually some employees, especially some engineers that I've been talking to that are very concerned and are looking to take the lump sum because they're really concerned about the actual pension being underfunded. So why don't we take a look at what those numbers truly are. So at the end of 2018, Boeing's pension plan had assets of $50.4 billion and was underfunded by $15.3 billion. That's a lot, as measured under generally accepted accounting principles. As of year end of 2019, the company's plan assets then were $61.7 billion and was 20.5% below fully funded. So obviously take a look at what happened this year, right? With everything that happened in 2020 and taking a look at the trillions of debt the country went under, let alone what occurred with Boeing. So we don't know how these numbers are going to jive at the end of 2020. It's probably going to look a lot worse than it did in 2019, obviously. Now, let's also take a look at some companies with the 10 largest pension funding gaps relative to market capitalization of the company. As you can see, Boeing is one of these 10 companies. So I can definitely see the concern because when you're underfunded, it is a big issue. So here is the Pension Benefit Guarantee Corporation, PBGC. Protections in case a pension plan becomes insolvent, can pay a maximum minimum guaranteed benefit set by law but is not backed by the government, and the payouts are funded through pension insurance premiums paid by still ongoing plans. So here's what's really important. Remember, there is something called underfunded obligation. So that's what it means. This is not backed up necessarily by the government. People think a lot of times, well, this protection is in place for pension plans. Remember, even the actual, let's look at California's pension, for example. It is not actually, backed up fully. It means it is an unfunded obligation. So if you look at California's pension for their own employees, which is a unfunded obligation, which means, by the way, the government has over 200 trillion, I'm not kidding, over 200 trillion underfunded obligation. You can see why there are a lot of issues where people are very worried about it. So when you look at the pension benefit guarantee, again, this is not backed by the government, and the payout are funded through the pension insurance premiums paid by still ongoing plans. So it's like money coming in, right? New money to pay for the old money pension. So this is why it's really important for the pensions to keep up, and that's why they looked at it, and they looked at why Boeing and some of those companies are obviously in the 10 largest, because it is a concern for a lot of people when you get to that level that it is underfunded. So these are some facts that were important that I thought I would share with you, that a lot of my clients that are from Boeing enjoy and want to know about, because, well, they don't enjoy it per se, but you know what I mean. They enjoy it as form of knowledge so they can make better plans when it comes to their pension options. Now, here is another thing. Even though Boeing froze pensions for 68,000 for their non-union employees in 2014, but even with these changes, still remains underfunded as listed in the previous slide. At the end of 2016, its pension had 57 billion in assets and 77 billion in obligation, a funding ratio of 74%, data compiled by Bloomberg show. So you can see I got this data from many different resources that have been giving these for the last few years of really understanding what's going on with these pension plans. And I think for you as a Boeing employee, it's important to know this because that could help you determine, do I take a lump sum or do I take a monthly amount? It is all going to depend on what your feeling and thoughts are. One, when it comes to the pension plan, your personal security and feeling. And two, what are you going to do with that money when you take it? And three, are you able to compensate for the income if you take the lump sum? And how are you going to organize all of the sources of your income to first mitigate taxes and keep more cash flow to making sure that your income will sustain you for the rest of your life and your lifestyle. Again, not just the go-go years, because I like you to think of your retirement, that you're going to have all of it being go-go. Yeah, you may get at some point slow down, but I don't like to look at no-go because I have a lot of clients that are in their late 80s and still going to the office and having a good time and doing consultation. And I have a lot of clients that really, due to the fact that they're taking care of themselves and they're being very healthy and being very active, can live a very active lifestyle throughout all the years of their retirement. Wouldn't you be lucky not to have a no-go year? So why not plan for that and make sure that you're setting yourself up in the right way to make sure that all the different buckets are going to be activated at the right time holistically together. Because I get a lot of questions asked that, hey, you know what, I have this Boeing pension, but I got my 401k and I got my Social Security. I may also have some income coming in from rental properties. What's the best way to compile that to get the most amount of income with the least amount of taxes? And that's key. Key is making sure that you're doing that as part of your plan and running Monte Carlos on it to make sure you're on the right track. So because we've had lots of experience with lots of running different numbers for Boeing plans, we'll be happy to run some numbers for you and see how you can maximize your income and mitigate your taxes. So don't forget, you can call us anytime to run these numbers. So where do I begin when I want to see what my estimates are and then, or if I want to apply? So let's start with if you're a current Boeing employee. If you're a current Boeing employee, log into myboeing.com and you select work life. And then there's a green quick access box and you can select retirement benefits. It's right there for you, so you can go ahead and use that to get there, or just call your Boeing Work Life Care team at 866-473-2016. It's always important to have this information handy so you can always be running estimates or asking questions that you may not know the answer to. Now, what if you are a former Boeing employee or other? In that case, you can see I have that written for you because it's pretty long. You have to log into Boeing Benefits Connections.benefitcenter.com//OP Global and make sure you're using your retirement benefit username and password. Or if you're having a hard time, just call the Retirement Service Center at 833-787-2772.